If you have this investment, don't touch it is often what we tell people. It is a great investment to have long term. And we're specifically talking about a health savings account. This is an account you can start saving into if you have a high deductible health insurance plan where you can start putting money in and getting a deduction on your taxes, which lowers your income today. And all that growth ongoing is tax free. And when you take that money out in the future for medical expenses, you're not going to pay any tax at all. I used to play basketball back in my day, and I was a three-point shooter. And so I loved scoring 3 points. Well, this is a way that you can do what we call a trifecta when it comes to tax planning. No tax up front, no tax on the growth, no tax when you take it out. It's about as good as it gets. 3 is better than 2, right? Is the way that we see it. So with this health savings account, the reason why we tell people not to touch it now is get the benefits of the tax-free growth ongoing. Too many people we see are using this every year. They think this is a way to cover that high deductible that they're going to have to pay. Hey, maybe my deductible is $2,000, and if expenses come up, I got to pay up to $2,000 to cover that. You are correct, but if you can, try to pay those expenses out of pocket. Keep this HSA growing long term. And you may think, well, what if I never need health coverage in the future? What if I never need it? Well, go look at the list of HSA things that can cover. It covers things like Band-Aids, long-term care insurance. There's a whole laundry list of things that can cover, so I wouldn't be expected for you not to be able to use that. The other consideration, I wrote about this in my book called I Hate Taxes that I recently got published, is that, hey, you can save your receipts and you can get it reimbursed in the future. And so we've actually used that as a strategy for people to do. Hey, save those receipts. We'll use those in an efficient year that's going to make the most sense if we never need it in the future, or maybe we just want to do some more smart planning with that health savings account. So that's what we ultimately say. Now, the other piece of advice I have for you with this HSA, this health savings account, is invest it for growth. This is more of that long-term bucket we always talk about. This is something that, hey, we're probably not going to touch it for another 20, 30 years, depending on your age, 10, 20 years. If that's the case, let's try to get as much growth so all of that growth is tax-free. And then since we're not touching it, it's going to keep compounding and compounding and compounding. If you have $10,000 today, if we get a 6% return, that will double in 12 years. 10,000 turns into 20,000. In 24 years, that 20,000 turns into 40,000, and you can see that is quite a bit of advancement from 10,000 to 40,000, and you don't have to pay taxes when you use that 40,000. That can be a very good cushion for your retirement. And the other consideration here is if you can max out your HSA, it's one of the first places I recommend people to max out. Me personally, it's the first thing I do every year. I max that out so that I can get that trifecta moving forward. So making sure you're taking advantage of this 3-point shot when it comes to tax planning.